Investors still make up 30% of the market right now in Canada. Does this make any sense? I'm going to be breaking down this article on this week's reaction video. Now, if you're looking for some help on how to navigate this real estate market in the fall, and fall essentially starts in this week where listings start coming active, buyers are back out, everyone's kind of like doing stuff right now, and the market will move. How much? TBD. And if you're looking for some help on how to navigate this market, because just like last year, it is a little bit confusing right now, whether it's going up, it's trending sideways, going down, there's more listings or there's more sales. No one knows yet. And as we kind of progress through, we're going to get more. So if you want help on kind of navigating the real estate market with actual data, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content like this. And if you're enjoying the content, make sure you smash the like button and subscribe to the Prime Properties channel. Now, the first article we'll be reviewing is investors account for 30% of the home buying in Canada, according to data. That seems a little bit high to me. I can say anecdotally, just off the top of my head, this year, we've had 2 or 3 investors buy. That's about it out of all the transactions we have. So it doesn't make any sense anecdotally, and I'm going to get into why. All right. So a couple of things I highlighted. So they're saying here investors are responsible for 30% of the home purchase in the first 3 months of the year, meaning January, February, and March of 2023. And those months were actually quite slow. It kind of picked up in March, right? And at that time, it was still kind of like end users kind of buying. And I would say still a lot of people panic selling a little bit, and those who had to move were moving. So according to data released by the Bank of Canada, that is up from 28% in the first quarter of last year. So last year being 2022, this was before any of the rate hikes, right? Because we're like almost 18 months in. So obviously we had way more investors in January, February, and March, like basically I'd say 90% investors, because money was cheap at the time, right? We're still at 0.25% overnight rate. Mortgages were like 2% still. So tons of investors at that time. So for me to look at this and read this article, I'm going to question the data because I highly doubt that we're having 2% more investors in all of Canada than we did last year when money was like a third of the price. So 2% to like 6% right now. I find it very hard that this number is true. So I try to find this Bank of Canada report, and I personally couldn't find this report. So again, not throwing shade at anybody, but this just is, when I read stuff and I have critical thinking, this doesn't make any sense to me. Now, the central bank defines an investor as a buyer who took out a mortgage to buy a property while maintaining the mortgage on another home. So I'm pretty sure this line was actually from the Bank of Canada's reports, because I've read a lot of them in the last 3 years. And we questioned that earlier because we're like, okay, you know what? This probably makes sense, but what happens to second homes, or what if like, a parent is helping on a mortgage or something, right? Does that make it an investor property? So I did a little digging as usual. So you can see here, this is a report from 2022, right? And this is saying the number of home purchases by investors increased in 2021. So this is, again, lagging data, but you can see over here in Q4 of 2021, the percentage of investors by that same definition in the article was 22.2%. So when you kind of look in this part, there's a couple of points down here where it said, hey, it's up from 20% in 2020. That kind of jives with what I see. But to say that this year, the first 3 months, 30% of the purchases were investors. Please send me the data. I haven't seen it, so I'm questioning a little bit. Now, the other part I've highlighted here is, meanwhile, the percentage of first-time homebuyers shrunk to 43% in the first quarter of this year from 48% in the same 3 months in 2020. So I also find this a little bit hard to believe, but more believable than the fact that there's more investors, right? Because home buyers, first-time home buyers right now are a little bit priced out of the market because it's an affordability thing, even though prices are maybe down from say like January of 2022, right? So when I look at this is, you know what, if the home buyers are down a little bit, that makes sense because it's an affordability. But again, if we think critically and we know that if the investor number is less than 30%, that means the repeat buyer, meaning like move-up buyers or first-time home buyer, one of those portions must get larger. And I do think that upsizers are moving in this year because it made the most sense, right? Upsizing makes the most sense in a downward market because the thing you're buying got cheaper nominally as like a dollar amount than the thing you're selling, right? So again, that's somewhat reasonable. Now, the thing I do agree with is the pandemic's low interest rate environment and the proliferation of marketing promoting real estate investing have encouraged everyday Canadians and investors to buy multiple properties. And I agree. And that's kind of the problem that we have when you have very low interest rate environment, right? Because you can't put your money anywhere safe or that will yield you, more than inflation, because now everyone's been talking about inflation. They understand what it is, right? Like I think our generation has now undergone through some inflation pains, and maybe there's more coming, and they understand the value of the dollar more when it's being devalued, right? So that's why you're basically trying to store money to keep its value, and real estate is generally one of the options, right? Now, during the booms, greater demand for investors can add bidding pressures and intensify price increases. And similarly, when prices are stable or declining, a lower influx of investors can add downward pressure on housing demands and prices. And that's 100% true, because that's kind of like the definition of what a bubble is, right? When we have a lot of demand on kind of supply, the prices will get bid up because the investors are chasing yield, they're chasing kind of store value, right? But on the way down, it's the investors that are going to let go because the investment property is not the property they're living in. So the investors kind of accentuate the kind of volatility of the market. So in the current market right now, and I've been seeing in past videos, a lot of the people who are like selling or panic selling because of the interest rates generally are investors taking like chips off the table, taking some profits, or they're deleveraging right now so they can survive. And those properties are investment properties that likely have tenants in them, right? They're generally not vacant properties because the whole boogeyman of Chinese people coming to buy and leaving empty, they don't need the money. They're not affected by interest rates if they're buying cash. So these investors who are selling, they're selling with tenants in them. And that's kind of the sellers I'm seeing in the last 2 weeks or so. Now, obviously, this may change in the upcoming months where I would say good properties that are vacant, that are listed by professional agents will know to time the market properly, right? But people who are listing in August, I'd say there's a little bit of desperation there, right? So the investors selling right now are adding downward pressure. And if you kind of think about it, like imagine an entire condo building, tons of like units very similar to one another. If one investor sells it with a tenant in it, which generally is like 3 to 5% less than what it is if it was staged and vacant, then that brings the value of all the other like same units or similar units down in that building. So that means if the next person needs to get rid of it, then that means they have to sell for less than the last one that sold. So it doesn't take many units in, say, a condo complex or in like a neighborhood to bring the values down. It just takes one person that is, bleeding or under a lot of pressure to bring the values down. And that's kind of what I'm watching right now. Do you have desperate enough sellers to drag the prices down, right? And no one has the answer right now. Now, the other thing I have here, and I'll read it, is the federal government has not addressed individual domestic real estate investors as it tries to come up with policies to deal with the lack of affordable housing. Instead, Ottawa has targeted foreign real estate buyers with a ban on purchase until 2024. So I've talked about this in the past before. I even said this, I think, going up to 2021, where there was talks about OFC restricting how you're going to get a down payment for an investment property. And the easiest way to restrict the amount of investors there are is to prevent them from, say, buying stuff with refinanced or HELOC money, right? So if you have equity in the home, maybe, about 5 years ago, or even like a lot of people 10, 20 years ago, you could refinance, take that money out and then buy another property because you have equity there. So not actually using any of your own capital, right? So if they kind of restricted that, then a lot of investors won't be able to buy it. Or the other option is you do a 35% down on another property. So what that means is instead of having 20% down, which is the minimum you need for an investment property right now, again, this is the proper way to do it. I know some people circumvent it, right? But this is the proper way to do it. And if you increase that amount, it's going to restrict the amount of like investors and capital out there. So that should restrict it. But instead, the government is essentially, blaming the boogeyman on foreign buyers. And we know that it had some kind of effect in the past before, but it's kind of non-existent. And this ban came in 2023, and the market did spike up in March, April, May in this year. So clearly, this is all like for theater and it's not doing anything, right? But again, that is just politics. I'm not going to get into that too much, right? And the final thing I kind of highlighted in this article, outside of like just questioning the data, is at the same time vulnerabilities are easing, the share of homeowners who put down less than 20% of a property's purchase price has waned over the past few years. They were responsible for 12% of the purchases in the second quarter of this year, compared to 18% in the period in 2020. So, yes, the way that the sentence and its paragraph is structured is correct. And it will tell you that there's less vulnerabilities in the market because people are coming more than 20% down. But the flip side of this is since 2020, even though we had prices come down 10%, they're still up about 30%. So we went from like a 800, 900 average price in GTA to about like $1.1 million, right? A little bit shy of that in the latest market watch. So once you get past the million price, you need 20% down. So you can't buy. So by the idea that prices went up so rapidly, it forced the people to put minimum 20% down because those are the mortgage rules. You can no longer put less than 20% down for most homes because they're not less than $1 million. You could put less than 20% down if you're sub $1 million, but not many homes are sub $1 million anymore. See what I mean? So again, question this data the way it's interpreted. Generally, Globe and Mail is pretty good, but when I read this, I think it's going to freak a lot of people out in terms of, oh, why there's still so many investors right out there? And it's going to be like, again, put the target on investors back, make them the boogeyman for, call it whatever, the next election or politician kind of thing, right? But in reality, I really don't think there are many investors right now. Most of the clients we're helping right now are just end users, or they are looking to move up. And we do have some clients who are selling, but they're investors and because they're deleveraging, right? So I wouldn't say that there are a lot of buyers that are investors right now. If anything, I would say it's the exact opposite. So if someone can find me this report, I would love to look at it and actually break it down in more detail, but I couldn't find it myself. So just kind of skimming through this and like the previous Bank of Canada report that they did have, that I did find and I did read, some of the numbers look a little bit iffy. But again, if you are transacting in this market right now, it's not that investors are out and no one's buying. It's just that you have to position your property in a proper way so that it's for the end user, right? Because a lot of the investors right now, they're a little bit scared off with the interest rates. The rents don't make any sense. And there's a whole lot of kerfuffle with like landlord-tenant board right now because the tensions between landlord and tenant is like at an all-time high right now. So again, for those reasons, investors aren't really in the market right now. And it does make sense for first-time home buyers to be taking advantage of this. And I've talked about this many times in the past before, right? With investors out of the market right now, if you're a first-time home buyer, you have a lot less competition. Investors, if they are around, they're not even going to be competing for the properties that are tenanted right now that are being sold by investors. So you got investors who are deleveraging, who are willing to let it go for less because it's tenanted and they know that. And you as a first-time home buyer or end user are able to provide these tenants with the N12 and get them out. And you can probably scoop it up from the investor because the investor is freaking out a little bit and they're kind of bleeding in some way, shape, or form. Again, you need to find out the motivation of the sellers, but there's a lot of those sellers in like the condo space right now. So it makes sense for a lot of first-time home buyers to be getting the market, right? But again, just be cautious because rates are still quite high right now. And a lot of the fixed rates that were held on like the 5 right now that are ending in like September 30th or so, they're coming to an end. So, if that is expiring sometime soon, then you obviously don't have enough time because we're like middle of September. But if you're okay with kind of say, a 1 or 2 to 3 year, like the 6%, so they can get like a discount called like 5 to 10% discount, and then get in the market, and then you can refinance out when the rates are lower. Yeah, it makes sense for you right now. But again, do your own due diligence, or if you just want to kind of chat about whether it makes sense for you to make that move, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?